Citibank, ABN AMRO, now called the RBS, they had to be really bailed out by the UK government. So this was a crisis which really propped up in 2008. I shouldn't say money, it is said that this is more or less a private debt crisis, not a, which was still manageable. Why manageable? Manageable in the sense that bankers lost confidence on each other. This interbank borrowings had really come to a halt. Whether if I lend to that bank, whether he'll be able to repay me or not. So what had happened? The credit squeezed. So whatever be the money which was available to be given out to the corporates for their development programs, that shrunk. Trade shrunk. So that had a major impact on the banking industry. Fair enough. That took some time to really salvage. Then came this problem in 2011. What did we see? We saw a sovereign crisis. That also had a major bearing on the banking industry. Sovereign crisis, why? Who was instrumental in this? Was any fiscal thing or a monetary thing? It was a monetary thing, which is the euro. Countries like Greece, Ireland, Iceland, they started thinking that they are at par with Germany or any other developing nations, that they can dole out money for their health plans, their growth, never even thought as to how they can really repay. With this euro moving sharply, rather adverse movement of euro, these countries failed to repay their debt obligation. That had a major brunt on the banking industry. Because from where did the government borrow? The government had to borrow from the banks. If they cannot repay the banks, where will the bank get the money from? So huge debt crisis. This has led to what? This had led to shrinking of debt. That means the bankers had restrictions to lend to corporates. Fair enough, this is our global scenarios. What has India got to do with it? Well, India cannot decouple itself from what is happening in the international market. India, the major brunt was faced by the foreign banks because capital became inadequate to really meet the capital adequacy norms. Credit had shrunk, so money couldn't be really extended to the eligible borrowers. This I am saying vis-a-vis the PSU banks, private sector, public sector banks, I mean the nationalized banks. There, from 1988, the committee which was formed in the name of Basel was going on. There Basel I had come, Basel II had gone. Now we are just waiting for Basel III really to come into effect from 1st of January 2013. Why I am saying this? I am trying to draw an analogy. What banking was in yesteryears and what banking is currently, the challenges which are going to be faced, and in totality. Because I think I will get into the the rudimentaries of it, that in banking what is being done. That though is very simple for understanding, means what bank does, what are the product bank does. That in any case, even if you keep my presentation, people will be able to understand. This dialogue itself just to develop some interest. You stop me whenever you want. What does this mean, or what bearing that has on the Indian banking scenario, or is it really something where we should not really explore? Of course not. Banking is a big challenge, and any challenges are rewarding. The thing is that if you take up any challenge and if you really fulfill that, you get the proper reward for it. Still now the people, for whatever reason, have an aspiration to work in a bank. And I am sure, though few people had raised their hand, raise your hand, a day will come when opportunities, lots and lots of opportunities are coming up. How? Now I am just phasing out. See, I will not get into bore up on the Basel III. This is international reforms, norms which lays the banks capital adequacy, stress test, liquidity norms. These are what Basel, encompasses. Got my point? Stop me if this is not exciting. Stop me, okay?